And what's going on, everyone? Things this morning are looking a lot better than they were yesterday, but we are not out of hot water. It's just not boiling right now. Pretty much the whole market looks just like this. Just giving you an overview of some of the stuff I talk about. Breaking news: the Bank for International Settlements has given its full backing to the development of central bank digital currencies, saying they are needed to modernize finance and ensure big tech does not take control of money. This is big news, guys. Really, 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 really big news. You can see right here, it's a full CIS backing. The train has left the station. We heard that recently too. Rosie Rios said that. I did not see this in the article, or I would have had that clip ready. Referring to the move towards central bank digital currency and its support. It is not that we are getting carried away. We are just looking around. The push comes as physical cash use falls globally, and authorities look to fend off the threat of their money printing powers from Bitcoin and efforts from big tech such as Facebook-backed Diem, formerly Libra, which is being ran by the same guy who ran PayPal Galactic that nobody ever talks about anymore. Without CBDCs, digital money would become increasingly dominated by big tech firms as they would leverage enormous social media user base. That is a place where you don't want to be, or governments don't want to be. So, it's big news. BIS says CBDCs on track to renew the institution of money in latest research report. While not an entirely new concept, the discussion shows CBDCs in the eyes of the Bank for Central Banks are still firmly on the radar. CBDCs offer in digital form the unique advantages of central bank money, settlement finality, liquidity, and integrity. CBDCs and open platforms are the most conducive to a virtuous cycle. You know, this narrative, we've been waiting for this kind of stuff. Central bank digital currencies should be designed with the public interest in mind. Retail CBDCs could level the competitive playing field and reduce the cost of payments. So, despite technological progress, digital payments remain expensive. Marginal cost to merchants of €1.25 transaction in your cents. So there's that little infographic for you. You'll see that this is really, and all this by the BIS was posted this morning because their report just came out, which you'll see at the end. Benefits of central bank digital currencies depend on structure of the underlying payment system and data governance. CBDCs promote open platform, fostering a virtuous cycle of greater access, lower cost, and better services. And you know, some of these graphs, we've seen some of these infographics that look very similar to this that always tend to have a certain company's name on them. CBDCs are a concept whose time has come, and it can be seen in various surveys conducted by the BIS. This is the retail CBDC research here. Wholesale, live, detailed CBDC. Central bank digital currencies built on digital identification, account-based CBDCs could help ensure financial inclusion and integrity while preserving data privacy. We all know inclusion, that's the big one. And it says available to general economy, all users identifiable, users can be anonymous, token-based retail CBDC, account-based retail CBDC. So they've done their work at this point. They're ready to go. CBDCs offer in digital form the unique advantages of central bank money. We already went over that. Bolstering the central bank foundations of the payment system. So they want to stay right where they are. They're not getting out of the way. People short the bank, my ass. It's not happening, people. CBDCs help respond to challenges from the huge volume of data generated in the digital economy, particularly around competition, data privacy, and integrity of the payment system. You know, they have their little challenge arising from the centrality of data in the digital economy. And then listen to this person discuss how central bank digital currencies are moving from concept to practical design, renewing the institution of money in the digital age as outlined in the BIS annual econ report.
You can think of CBDCs as a digital form of cash. At the moment, digital payments available to ordinary users go through financial intermediaries like commercial banks. When you make a payment, you're transferring a claim on your bank to the receiver's balance at his or her bank. With CBDCs, you could pay someone just as you would by handing over cash, but do it digitally using your smartphone or other devices. CBDCs are a claim on the central bank, which means that the payment is certain and final without leaving things to intermediaries to complete the transaction. And just like cash, CBDCs would also serve as a salient marker of the trust in sound money provided by the central bank. Due to their construction at the core of the system, CBDCs could offer a number of advantages that flow from the centrality of data in the digital economy. For instance, they can help in setting up an inclusive and efficient payment system by allowing data use to promote a competitive level playing field. They can also protect privacy while maintaining integrity of the payment system and law enforcement. It would be fair to say that CBDCs are an idea whose time has come, and we can see it from various surveys conducted by the BIS. If they're done right, CBDCs could form the backbone of a highly efficient new digital payment system by enabling broad access and providing strong data governance and privacy standards.
I know a company that's working on private ledgers for central banks to issue central bank digital currencies. And then this is just saying that, you know, this is their annual report being released, yada, yada, yada. You guys should all go check that out. Tons of good information. I mean, it was summarized pretty well there, but yeah. Keep in mind, like I said, Ripple is working on private ledgers for central banks to issue their digital currencies on. That's public news. It's been out there forever. I've covered it endlessly. I'm not even going to pull the clip up right now. It's out there. Everybody knows. Here we got some other stuff. This is some of the stuff I think is why you will see the market rebound, and not just the crypto market. I think markets at large, because there's a lot of different narratives going on. But let's just listen to this guy for a minute.
So, how many of all of the president's proposed tax increases that we heard about, how many are still viable in this Congress, do you think, Congressman?
So I will tell you, I think that we'll be able to block many, if not all, of President Biden's tax proposals, mainly because, you know, they're crippling proposals. They hit job creators, small businesses, working families, right as we're trying to find our way out of this pandemic. And I think more and more moderate Democrats understand that if they go home and vote for these massive tax increases, they're not coming back to Congress next election.
So how many of all of...
So you got that going on. I think that's helping some people relax. Some of that's not being talked about. And then this is back onto the Bitcoin narrative a little bit. Is winter coming?
Joining us right now with his take on crypto and the rest of the market, Tom Farley, Farpeak Chairman and CEO. He's also, of course, the former president of the New York Stock Exchange. Tom, it's great to see you. Curious your reaction both to the move in Bitcoin, I think in large part as a result of what China has done, but also in the context of what we've heard out of the Fed and what we see in the broader markets.
Good morning, Andrew. It's great to be back. I think Novo was kind of, I like the way he thinks about it. Oh, it's $1.5 trillion market cap. I think of Bitcoin as being a sub-trillion-dollar market cap. I think the upper bound for now is gold, which is about a $10 trillion market cap. In order for Bitcoin to someday exceed gold, it'll have to be more of a accepted form of currency. I'm not sure, frankly, if it ever gets there. With respect to the recent price moves, I'm kind of sanguine about them. Bitcoin's a very volatile asset class, in part because it's a new asset class. I have no doubt it'll go up, it'll go down. Over the long term, I still think it's a lower left to upper right trend, and I think we're going to see that play out over 5 years. I think this kerfuffle about energy usage is an interesting conversation, but by and large, I think it'll be resolved because I think the blockchain at its core adds to efficiency, and in fact will add to energy efficiency over time. And so I'm still very optimistic about the whole asset class, but in particular, frankly.
So then it goes on. We got another clip here.
What I mentioned is on the energy piece that you're talking about, I don't disagree with you at all about the energy component in terms of blockchain, but Bitcoin unto itself requires so much energy, it's somewhat preposterous how much energy it requires. If you were going to create a new currency today, given all of the concerns around energy, I'm not sure this is how you would do it.
No, it's not. It's every other digital asset in existence almost.
And so for all of those companies out there that are screaming about ESG and this and that and the environment, I don't understand how they can actually get behind this in a meaningful way. at least not now or any.
You notice too, they have finally stopped listing it as Ripple and have started showing it as XRP. That's a big deal, people. That for years that did not happen. It said Ripple here almost every time you would see this on mainstream media. That means something. In the middle of a lawsuit by the SEC, they are disassociating the asset with the company. That's my opinion, speculation, whatever. But
anytime in the future, or in any time in the near future, rather.
There's a lot in your question for me to unpack. Let me just let me just do it quickly. Bitcoin is global. The users are global. Even if you had an entire crackdown of China, which would be huge because you're talking about 10-15% of the global population, Bitcoin is an important innovation. And when I say Bitcoin, all cryptocurrency, but in particular, I'm referring to Bitcoin at the moment. Well, with respect to the energy efficiency, Andrew, look, about half of energy that goes into Bitcoin is renewable. That's an estimate. You'll see different estimates, a little lower, a little higher. And not only is it renewable forms of energy, but oftentimes it's the waste. It's energy that otherwise wouldn't be used because the miners have these rigs that mine for Bitcoin, and they can flip them on and they can flip them off. And the waste is a lot cheaper, so they'll flip them on and they'll use that wasted energy. So there's really no environmental harm in that respect. And I think you're going to see other advancements that's going to, in general, make mining for Bitcoin more energy efficient. And overall, look, new innovations require more energy. And so if we don't want to use more energy, we should just stop all innovation.
We're not going to Mars if you're worried about a carbon footprint.
We're not going to Mars. We're not going to increase GDP. We're not going to be more efficient as a society.
Tom,
so if you believe that the blockchain itself is an interesting tool that is going to be efficient and is going to add to gains in economy and quality of life, you have to bear some increase in energy use.
Tom, I want to disagree with you wholeheartedly on the facts, which are to say is 50% of Bitcoin. I do not believe, and I have seen the numbers that you're referencing. Are clean energy. I do not believe that to be the case. I actually think there's a lot of data to suggest that currently is not the case. I think that is a goal. And by the way, it's also the goal of Elon Musk. If it was true, I believe that he would actually be back using Bitcoins tomorrow. So I just want to put that on the table.
So you,
as a secondary
think everything
issue,
that Elon Musk is doing in cryptocurrency is rooted in the facts and is rooted in, his support of Dogecoin is entirely rooted in the facts.
I'm just suggesting to you that if it really was over 50%, which is, by the way, the number that he's already spelled out quite publicly, okay, I think we hear something quite different. So let's just start there. 2, Ethereum requires so much less energy than Bitcoin, it's not even funny. To put all of this in context, we're talking about one Bitcoin transaction is the equivalent of something on the order of about 750,000 Visa transactions. It's the equivalent of 50 some odd or 500 hours, I believe, or 500,000 hours of watching YouTube. The idea that I agree everything's going to take energy, but some things are more energy efficient than others. There are remarkable things going on in crypto with blockchain, not Bitcoin, but with blockchain that does not require the same kind of energy. And I'm only saying that if you are a BlackRock and you're going to come on our air and you're going to run around screaming at companies around the environment, which might be a good idea or might not be a good idea, and we can debate that. But if that's the position that corporate America and the investment community is taking, Bitcoin, I would argue to you, is not in keeping with that.
Yeah, I think you're underweighting the importance of economic freedom for a lot of people around the world to be able to go buy Bitcoin and not be scrutinized by their governments. I mean, look at what's going on in Nicaragua right now.
They could go buy any other asset. These Bitcoin people, man, it's ridiculous.
If you're a Nicaraguan citizen and you're holding assets in Nicaragua, what are you going to do? You'd be quite concerned about the crackdown there. One of the opportunities is you could go buy Bitcoin, and you could leave that country with just a password memorized in your head. So I understand there's significant energy use. A goodly portion of it is renewable, whether it's 40 or 50, Andrew. You and I can.
Tom, when does it?
Just notice this is mainstream media. You see, I mean, they're pounding them. They're pounding Bitcoin still. What does the Fed know about the future? That's a good question. Maybe what happened is people had the weekend to think about how ridiculous it was to sell based on what Bullard said, because he really didn't say anything. The Fed has not changed its policy. I guess people started to realize it doesn't even matter what anybody at the Federal Reserve says about the policy is going to be 2 or 3 years into the future, because they have no idea what's going to happen in the present, let alone several years later. You know, it's an interesting article. Cointelegraph was on Twitter. What do these bears know that we don't? A bunch of traders closed their short positions just before the drop below 32,000. What does this mean for the future of Bitcoin price? It's interesting. Manipulation run rampant all the time. Here is an interesting thing. Check this out.
Somebody's got to pay for this. If we're going to have this level of spending, you got three ways to pay for it. Either sell the bonds to Japan and China, right? You either raise taxes, or you print money. There's one you could grow out of it, but we're stuck in a low growth environment because we've so overspent. So now there's $30 trillion. You know, Obama, because of what he did to the Federal Reserve and the zero interest rate, we added $10 trillion during Obama's watch, and we've added another, I think, $8 trillion during, or $4 trillion, $2 or $3 trillion during Trump's, and now we just exploded under Biden, and it's nowhere, it's not stopped. Now they got this modern monetary theory. There's this new theory about it, but hey, that's why everybody's running to crypto. Right? Yep. That's why everybody's running back to gold and silver. That's why people are prepping. I brought some Financial Times, and every time you pick it up, it's the global apparatus, regulatory apparatus, has one focus in mind: how do I crush crypto? How do I make sure? How do I make sure it's not an alternative store of value like gold and silver are?
Yep.
They don't want you to have an alternative.
This is the Bank of International Settlements out of Switzerland, basically, that's running.
Well, that it's also it's also the central banks. It's the Bank of Tokyo, it's the Bank of England, it's the Federal Reserve. They're all going to regulate it, and now you can't do these just using blockchain. You can't just be private. They want to get into all the checks and balances. The CCP is shutting down all the farmers themselves to make it tougher. What they want to do is they see the ability of crypto, and look, crypto's not. I disagree with President Trump. It's not a scam. There's $2.1 trillion of dollars in the world trading every day. Right? because you have to convert to dollars to do all there's $2.1 trillion out there, okay, every day, doing transactions all over the world. I think there's now $2.2 trillion of crypto. So there are scams in it, but it's clearly an alternative and it's definitely a alternative store of value. It may not feel like that to Bitcoin holders today when you're down at 30,000, but you know, for guys that bought it at 5, it is, and it's still an alternative. When you look at these other cryptocurrencies, you got to take your trade. But the central apparatus wants to take that option away from you.
Yeah, again, if central authority messing things up.
This is not financial advice.
Yep.
I'm just saying, if an individual put a portion of their paycheck into Bitcoin every week.
So yeah, you can see what they're going on about, and UK regulators warn against 111 unregistered crypto companies and FOMO. The Financial Conduct Authority has warned UK consumers of dealing with these unregistered crypto firms, calling it a very real risk. We have a number of firms that are clearly doing business in the UK without being registered with us, and they are dealing with someone. Banks, payment service firms, consumers. This is a very real risk, and we are worried about that. The reason many are investing now is because they have a fear of missing out on what might be a boom. Leaving aside how volatile these instruments actually are, it has tulip mania written all over it. And you can research like the tulip craze thing. That's a pretty interesting story in the investment world. Bullish news from the institutions. Van Eck has a new Bitcoin strategy fund and will invest heavily in Bitcoin futures. This is a pivotal moment for the digitization of transactional activity, says Goldman Sachs McDermott. Goldman Sachs has reportedly started trading on JP Morgan's repo blockchain. So you got the two biggest players in the game pretty much. They're here. You just heard Van Eck. They're here. Check this out. Here's some JP Morgan for you, I believe. Stuff. There's a lot going on, people. This is Andreessen Horowitz, who is also a early investor in Ripple. You'll see them all over all kinds of stuff. They have tapped Deutsche Telekom as a subsidiary as for a CELO validator, and CELO is an asset a lot of people are starting to really pay attention to. I'm interested in getting some myself at some point if it remains an option when that time comes. Hodler see opportunity in Bitcoin price crash says, CoinShares exec, what we're seeing is a correction, a contraction, and a lot of what is getting shaken out is what we call the paper hands, the weak hands. I agree with that. I think, it's a transfer of value. Markets are not for the impatient. Brave takes aim at Google with privacy protecting search engine beta. You will be able to search the web and still get high-end results on the Brave browser without it tracking all of your clicks and everything. I thought that was super cool. And then I'm going to end this video with what Credible Crypto said. And I was talking to somebody in the group about this morning. They have shown where it looks like this was a big ABC correction, and the drop from 14,000 to 3,800 was a major wave too, and this drop from 64, or no, they're talking about Elliott waves, excuse me, to 28 is our major wave 4, which means the major wave 5, is supposed to be major to the upside. That's the biggest impulse from what I understand. And this guy asks, is there an actual logic behind that 64 to 28 being 2 instead of 4? Curious about your opinion. I know your reasoning behind wave 4. Just want to know if you see there any possibility that it may be wave 2. Actually, Credible Crypto says it doesn't make sense to me because the move from 3 to 14 was a crystal clear impulse. The only way the move from 64 down can be a wave 2 is if we dismiss the move from 3 to 14 as our wave 1. And then he says his wave 5 target is somewhere above 100,000 but below 300,000. He is talking about Bitcoin here. But a lot of these people, this is what a lot of people are saying. So they think it's going to keep going up. And with that, I'm going to get out of here. I got to get to work. I'll catch you guys on the next one.